Yep.
The PMI is a private mortgage insurance thing that benefits you lenders, right?
No.
No.
No, it
have
kind
Mr.
of
Gupta-
makes us all mad, truth be told.
Yeah. So yeah, hey, Mr. Gupta, tell us about LPMI, because that's huge, especially out in Loudoun County when certain clients don't have 20% to put down but refuse to pay mortgage insurance.
Okay. Well, nowadays I most of the time I tell them to pay the mortgage insurance.
Mm-hmm.
Because LPMI is basically you are paying a higher rate of interest on the whole loan amount. Whereas when you pay the PMI, right now the PMI rates are so excellent. The credit score is good. I mean, they are very cheap. Rather than go with the PMI and then gradually as your principal is going more, PMI will go away and then eventually go away.
Sure.
Yes, but you have an option of paying a lender paid PMI. When I bump up the rates, they will pay it, or you can pay at one time the whole PMI, so it doesn't. Sort of touch wood. I have been able to convince people not to go with the lender. I don't like. I don't say it, because
in the right circumstances, the situation. If you know you're only going to be in the house for usually the payback period. If it's more than 6 years, typically you don't want to do it. But it's just options that don't exist or only exist with conventional, that don't exist with other programs.
FHA, you have to, even if in an FHA you are putting 20% down, you still have to pay the PM.
Exactly.
And those MI premiums, and I think Gary, Ali really had some great information, but those MI premiums, if the credit score, as we all know, it drives that, because I've seen like the difference between somebody having a 680 credit score, getting monthly MI, and somebody having a 720. And when I say night and day, it's literally like night and day. Somebody says, well, 40 points. Even from a 680 to a 700, those single premium factors can be high. The monthly factors, you can forget about LPMI. I had a buddy, I'll give you a quick story, because stories always help. I had a buddy of mine, Anita, in Atlanta, and he doesn't do conventional at all. And he called me. He was like, I got a 660 credit score, and she's trying to do PMI. And I said to him, why? And he looked at me, he was like, what do you mean? I said, run the factor and then compare it to FHA. And he said, oh my gosh, the factor is like 1.5%. And I said, well, what do you want me to tell you? I said, what do you want me to tell you? Mm-hmm. But PMI, it's credit score driven. It's risk driven. I mean, it's just private mortgage insurance is risk driven. And so the better the credit score, the better the MI factors. But I mean, Mr. Gupta, we all have products where you can do a home ready with 3% down, 5% down. I mean, there's so many great conventional products that are available to clients, and 3% down, that's a great option to either, become, I always say you're starting your real estate portfolio, even if it's your first property. It's one of many. Yep. And if you can get into a house and you find a great deal and have a great agent such as yourself, and you can get in with 3% down, it's a win-win situation.
Yeah. I don't think consumers should let the PMI thing deter them from moving forward with their goal of home ownership. I mean, I think when you get 20% value or equity in the house, PMI do come off your mortgage payment. So it's still a good product to have that option as financing.